Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal. Now, there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? On the ET Money Show, we have on board Arnav Pandya, founder Money Edu School. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571, or you can email us your queries on themoneyshow@etnow.tv. Good evening and welcome to the show, Arnav. We have this first question coming up from Ashima. And she says that she's been investing 20,000 in UTI Nifty Index Fund, DSP Mid Cap Fund, SBI Small Cap. And she needs to understand if she needs to add more fund in her portfolio, looking at the volatility in the markets. And ideally, how many funds should be there in a portfolio for an investor is what she also wants to know. And what would be the best or the ideal fund mix for an investor who has the risk appetite of, say, medium to high?
Good evening, Kavita. So, if you look at Ashima's portfolio, you can see that there are three funds there. The good thing is that one fund is a large cap fund, there's a mid cap fund, and there's a small cap fund. So, on the face of it, it looks as if that there is adequate diversification within market caps. But actually, if you look at the weightages in terms of the allocation that has been made, then you will find that the mid and the small cap space, which is obviously more volatile, has nearly 67-68% weightage in the current allocation. So this is going to make the portfolio more volatile. For an investor, according to me, see, around 4 to 5 funds are good enough if they do not have a very large portfolio. It's only when your portfolio exceeds a certain size that you can add 2-3 more funds, which will take care of the large amounts. So in this case, even a 4-fund portfolio is good enough. And my suggestion is that in this kind of portfolio, to reduce volatility, there is a need to have a slightly more exposure to large cap stocks in the portfolio mix. So in that case, my suggestion would be that Ashima should go in for a flexi cap fund. If you look at flexi cap funds in India, around 70% of the exposure goes to large cap. So obviously the large cap weightage in the overall portfolio will increase, while remaining 20% is in mid caps and around 7 to 8% in small caps. So if a flexi cap fund is added, then automatically the weightage of the large cap in the portfolio will increase. My choice is something like, say, a Parag Parikh flexi cap, where there is a value based approach to investing, and this also gives a lot of stability to the overall portfolio.
All right, so that's the recommendation for Ashima. The next question is from Kaushal, and he wants to know what kind of funds can he invest into for a medium to long-term horizon. And he has a target of to collect a corpus of almost 10 lakhs in next 3 to 4 years. Also, what should be, I mean, on his behalf, I want to know that what should be his investment amount.
So, see, first thing is that one has to identify and actually define what a medium to large time exposure is, because medium to long term is different for different people. When it comes to investing, if your time horizon is less than 5 years, then I mean it will not qualify as a long term investment. So, for his specific need, Kaushal has just 3 to 4 years of investment left. Now, even if you invest regularly, on an average, the investment will be the amount will be invested for 1.5 to 2 years. So in this case, a hybrid approach is the best approach, because an equity approach will not be suitable for this kind of time frame, which is quite less. So a hybrid approach is the better alternative, with the goal that in the last 1.5 year, even the equity portion is shifted towards the debt side, so that the goal amount is there when it is actually needed. So in the initial phase, something like a balanced advantage fund, where the fund manager decides the equity debt mix, would be an appropriate option for Kaushal. And if he has to achieve this goal of, say, 10 lakh or around that in this time frame, according to me, if he has to invest at least 25,000 a month to reach to that target. See, because the time frame is less, he should not expect too much of returns to add to the corpus that is accumulating. So here, a vast majority part of the actual amount which will be available will be through the amount which is invested, which is why I'm saying 25,000 per month would be his investment requirement.
All right, we move on to Shamila's question, and she says that she's invested in Nippon India Small Cap Fund for at least 3 years now, but the small cap segment has been increasingly volatile in last 1 or 2 years. So she wants to know if she can either switch to some other fund or some other category, or if she should hold on to this particular fund. 1 or 2 years time horizon to look at a fund's performance, especially a small cap, is too less. Nippon India Small Cap looks like a good one in this category, but do you think she needs to switch?
So my question is that why is the small cap actually in the portfolio in the first place? Because small caps by their nature are going to be volatile. So you will find that sometimes small cap funds are at the top of the heap in terms of various categories of funds. It could be that in the next time period they are right at the bottom. So that is inevitable. So if there is no stomach to take such volatility in the portfolio, then there should be an exit. Or if there is a wrong allocation to small caps, or the allocation is too high, then an exit should be made. So that is the first point in terms of whether she should have or she should keep the small cap in the portfolio or not. Coming to the actual fund, Nippon India Small Cap, I mean, if you look at the 3 year compounded return, it's actually 33%. So that is going to be it's a very high figure. And at least on the performance fund front, I don't think there is any cause for disappointment. But this does not mean that this kind of performance will continue, because there is a huge gap in terms of how small caps perform over a period of time. So expect the overall return to come down. But Nippon India Small Cap Fund as a fund by itself in this category is not an underperformer, because it has consistently outperformed its benchmark. It has a good portfolio. It has a good allocation across various sectors, not too much risk. And hence, I mean, if she is looking to keep a small cap, then this fund is not a problem and it should not be changed. But if there is no need for a small cap exposure, then this investment needs to be exited.
So I think that will be all for our viewer query segment today. And thank you so much, Arnav, for being on the show and helping our viewers with that. And on this note, it's a wrap on the ET Money Show as well. But then I leave you with a WhatsApp number and an email ID where we are waiting for your financial planning queries. Anything related to your mutual fund, insurance, credit card, loan, tax. We have your back. We will get your queries answered by our expert panel. So don't forget to WhatsApp or email us your queries. Thank you so much for watching. Goodbye.